This is Alan Bush with the Daily Financial Forecast for Thursday, September 20th. A rather strange day as far as the news and how markets are reacting to the lack of market-moving news. Stock index futures advancing to new historical highs today, at least in the S&P 500. Also, we have the cash Dow at a new record high. And yet the news was rather limited. We did have jobless claims coming in at a 49-year low. But that really is not a indicator that often has much market impact. So apparently there is something behind the scenes going on that is very market friendly, at least for the stock index futures. That remains to be seen. Also, it is a rule of thumb that when a market moves for no apparent reason, that trend will continue. So with that in mind, stock index futures still appear to be headed higher, not just in the short term, but also longer term, as interest rates remain very low globally. Moving over to the currencies, another odd mover, the dollar index, sharply lower. In fact, the dollar should have been supported by the jobless claims report indicating a strong U.S. economy, and yet substantial weakness in the dollar index, falling to a 14-week low. So our outlook on a dollar still remains a bit negative, as interest rate differential expectations are still a bit bearish for the dollar index. The euro currency advancing once again also on very limited news. Some bullish news on the pound, with retail sales in the UK coming in a bit better than expected. So from here it looks like the dollar will probably continue to weaken. The euro currency will probably continue to advance. Interest rate markets seeing lower prices in the overnight trade, especially for the bonds, which fell to its lowest level since October of 2014. Much of this linked to flight to quality long liquidation, a stronger U.S. economy, what appears to be increasing Treasury offerings of 30-year bonds. Since then, there has been a bit of a recovery in the bonds, but our outlook has not changed at all. I still believe that the trend is lower for the interest rate futures market, especially the long end, the 30-year bonds, as the Fed continues to raise interest rates. So the outlook remains bearish for the 30-year bond futures. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.